Okay, so the first one, Tutors Limited is a business providing A-level tuition. Tutors Limited buys a computer on credit, so credit that's going to be key, from PC World to use for online tutoring. So PC World's their supplier, they're supplying computer on credit, so that's definitely going to be one of the accounts. So the source document, well, the evidence of a purchase on credit is the purchaser's invoice, the book of prime entry. Well, it's not the purchaser's journal because that's only for purchase of goods, and he's not going to resell this computer. It's for his own use, for business use. So therefore, it's a general journal because he's purchasing non-current asset. Now, the two accounts. Well, one is going to be the computer account or equipment account, you could call it. Not purchases, because like I said, it's not goods. So one's going to be the computer and one's going to be PC World. Well, the computer's an asset, so that has to be the debit. And PC World's supplier, so it's a liability. So that's the credit. Okay. Number two, Tutors Limited has £30,000 issued share capital from 75p ordinary shares. So straight away, you can work out how many shares they have. So 30,000 divided by 0.75. So divide how much capital they got by how much a share is worth to get how many shares they have. So 40,000 existing shares. Okay, and they currently have £20,000 share premium. They have a bonus issue of shares. Remember, bonus issue means that they give shares to existing shareholders for free, essentially. They use their own equity to pay for it. So they're going to use the share premium to pay for it. So one new share for every 4 existing shares. So we do 40,000 divided by 4. So divided by the old times by the new times by 1 gives us 10,000 new shares. Well, a share was worth 75p, so 10,000 times 75p gives us £7,500, and that's going to increase the issued share capital. However, like I said, a bonus issue can't increase equity overall, so something's got to decrease. So the share premium, we use up some of the share premium to fund the shares. So the issued share capital goes up by 7,500, the share premium goes down by 7,500, so they balance each other out. Okay, third one, gearing. It's non-current liabilities divided by capital employed times 100, and capital employed is non-current liabilities, so it's equity or capital, and if we're a limited company or sole trader. So the non-current liable, let's go through the revenue, doesn't impact any of this. Equity, so that's going to be that's going to be 6,000. Debentures are non-current liabilities. Bank overdraft are current liabilities, so we ignore them, and bank is an asset, so we ignore them. So the capital employed, well, non-current liability was 20,000 plus 60,000 equity, so that's 80,000. And a non-current liability was 20, so we do 20,000 over 80,000 times by 100, which gives us 25%. Okay, number 4. Tutors Limited paid £56 fuel costs by debiting vehicle expenses and crediting the bank. So let's look at what they've done. So vehicle expenses and bank. So they've debited vehicle expenses by £56 and credited the bank by £65. Now, the fuel cost is £56, so we should have done, we should have debited vehicle expenses £56, so that's correct. And we should have credited bank by 56. So what's happened is the numbers have changed. So it's an error of transposition, which is just a special case of unequal posting. So you could have either of those two. Okay, so to fix this, well, I want to get rid of £9, so I put 9 on the other side. There's no change on here, so the other 9 must go on the suspense account. So my general journal, well, it's going to be bank, debit, credit, bank, debit by 9, and the suspense, credited by 9. And last one, bit of new stuff. So Tutors Limited offers 1.5 hour sessions for maths and 2 hour sessions for accounting. The variable cost for maths are £10 per session, and they charge £40 per session. So for maths, we have, well, it's £40 selling price. Take with the variable costs, which are £10, which leaves us with £30 contribution. And it is 1.5 hours. So if we divide that by 1.5, we get £20. So it's £20 contribution per hour. Do the same for accounting. So accounting, the variable costs are 15 and they charge £60. So £60 take with a £15, so it's £45 contribution. Divide that by how many hours? So it was 2 hours for accounting. So that gives us £22.50 contribution per hour for accounting. So accounting gives us the highest contribution per hour. So that's what we should focus on as a business.